Okay, Guillermo, could you please talk us through your base case for the euro for the next 3 months?
Sure. So essentially, we think the Eurozone debt crisis can escalate further. And the problem we see is that potentially politicians might not take the necessary actions soon enough to deal with the crisis. And as a result, we think the risk premium attached to European assets will actually show up in euro dollar. So essentially, euro dollar can come lower. And on top of that, we think the ECB will actually ease policy in response to a worsening of financial conditions, but also in response to weaker growth prospects. And as a result, we think over the next 3 months, euro dollar can go to 125.
Okay, thanks. And if that's weighing on the euro, is it going to have a similar impact on other European currencies, such as the pound?
Yes, in principle, given the links that we see in trade and also in financial markets, you would expect the currencies of the key trading partners to do badly. But in the case of the sterling pound, is probably slightly different in the sense that we might see more QE in the UK, and that should weigh on sterling. But at the same time, the Eurozone crisis might deteriorate to an extent that the euro actually falls by more than the expected fall in sterling. So as a result, we could see euro sterling actually coming off over the next, say, 3 months.
Okay, and the Nordic currencies, sometimes they've been seen as a safe haven. Sometimes, and more recently, they've been reacting even more extremely than the euro to the risk-off scenario. Do you see that continuing?
Well, I mean, I think that they don't really qualify as safe havens because they are not liquid enough. And actually, they are so interlinked with the Eurozone economy that they actually might sell off if things get worse in the euro area.
Mm-hmm. And what's the worst that could happen? What's your worst case scenario for the euro area debt crisis?
So I think the worst case scenario is one where the Eurozone breaks up, and that could happen in different ways. But essentially, that's a very nasty scenario for European assets and for the euro in particular.
Mm-hmm. And how would that influence euro dollar?
I mean, we think essentially, the risk premium attached to European assets would be even bigger, and the policy response by the ECB would even be more aggressive, and you would run the risk of banking crisis and big financial crisis, and therefore the euro could go relative to the dollar to almost 1 or something like that. I mean, according to our regression analysis and some scenarios that we have run, we think euro dollar could go almost to 1. But I would take those scenarios with a pinch of salt because there's a lot of assumptions behind the scenes.
Mm-hmm, mm-hmm. But in essence, then the dollar is still the safe haven of choice.
Oh yeah, definitely. I think in this type of environment, people like going to liquid assets, and the most liquid currency out there is the dollar for many reasons. But one of them is that the financial markets of the US are still the biggest and deepest markets in the world, and therefore the dollar is still the safe haven of choice.